Welcome, ladies and gentlemen. First day, first morning here at the Vancouver Resource Investment Conference, and with me here is Mark Jarvis, the CEO of Giga Metals. And of course, we want to talk about the future of battery metals. The company has a lot of nickel, a lot of cobalt, and that's exactly where you want to be these days for e-mobility. Good morning, Mark. Great to have you here.
Well, very nice to see you again.
Yeah, thanks for taking the time. Maybe you remind us shortly on your company. What are you doing exactly?
Okay, well, we've got an extremely large resource of nickel and cobalt and sulfides, about 5.2 billion pounds of nickel and more than 300 million pounds of cobalt in the measured and indicated categories alone. You can double that again for if you add inferred. We've been working on coming out with an updated PEA, which we expect to have out in about 2 weeks from now.
Oh wow, that's very close. Okay, super.
So something to watch for.
And the project is around the corner here, I would say, right?
Oh yeah, it's in northern British Columbia. So it's a Canadian jurisdiction, and it's interesting. It's a bit of a two-edged sword. As everybody knows, it's Canada has very high environmental standards, and so that can make it difficult to bring a project into production.
Yeah.
On the other hand, the manufacturers of electric vehicles in Europe and North America are very concerned about ethical supply chains for their materials.
Absolutely, yeah. And
so
you would meet that standards easily, right?
Easily, like as a Canadian operation, if we get into production, it's because we passed all the environmental hurdles. Also, we've been doing a lot of research in conjunction with the University of British Columbia about sequestering carbon dioxide in our silicate tailings, and this is a big deal. And we're working on ways to measure this and to get the ways to measure this certified by the BC Climate Secretariat. So, it's a good jurisdiction, Canada, high environmental standards, rule of law, but also we will be sequestering CO2, and there's a very good chance that we could be a carbon neutral mine. So very interesting.
Well, that's really interesting, yeah. I must
so
say.
If you're looking for ethical supplies of nickel and cobalt, you have to talk to us.
Definitely, yeah, that really sounds like.
Yes.
And I mean, nickel is anyhow getting, let's say, more and more involved, meaning percentage-wise, into the new, I would call it the future batteries, which are now designed,
Absolutely.
And we still need cobalt, of course,
You still need cobalt to stabilize the battery. All the big research money is being spent on how to increase the percentage of nickel in the lithium-ion battery, because it's the nickel that holds the electrons. And so if you want your car to go farther on a single charge, you need to have more nickel in your battery chemistry. But you still need cobalt to keep your battery stable.
Of course. So, yeah, absolutely. Otherwise, not really working. No. As you said, in 2 weeks, the new PEA is coming out, but maybe can you give us a bit of an idea of the size of the project? We know now what you have in the ground, but how much money is approximately needed? How long would be a mine life, for example? Production costs, maybe anticipations, as we know, the numbers are coming.
Okay, now I don't actually have the numbers yet. We're getting very close to having those numbers, and I would get a preview. If I had them, I wouldn't tell you yet, because it's it's coming out very shortly. But I honestly don't have them yet. But I would look at a capex of somewhere in the order of $1 billion, and ultimately we're looking at a mine that'll be capable of producing roughly 45,000 tons per year of nickel in a very high-grade clean concentrate for 35 years.
Wow!
So big deposit. World-class, it would be a world-class producer, and we're very similar in size and scale and to the big giant HPAL projects, the high-pressure, high-temperature acid leach projects. Although we'll be much cheaper per annual ton of production than the HPAL projects, and we're a much more reliable processor.
Yeah, of course.
So crush it, grind it, float it. It's all old technology. It's all very good, easy technology.
That would mean, just like if we look at from a bird perspective, you have already then a beautiful margin on the project.
Yes.
At today's prices.
No, actually, we're just like the HPAL projects in that to actually look at at solid economics on a 100% equity basis, we're looking for slightly higher prices of nickel. We won't be the low-cost producer, but in terms of the other large undeveloped projects in the world out there, we're at the lower end of the cost curve. So in other words, we are competitive with HPAL projects, and then in environmental terms, we are much more friendly to the environment than an HPAL project. They strip mine, tropical rainforests to feed these HPAL projects, and a lot of them just dump their tailings into the ocean.
No,
so
that's not a good idea.
It's not ethical supply.
Yeah, exactly.
So,
let's come to 2020. Let's assume everything goes the perfect way with the PEA. You want to bring out the new numbers.
Right.
What are the next steps? What is the vision?
Well, what we want to do is then advance it to pre-feasibility and ultimately to feasibility. So we would have some drilling to do this summer, geotechnical drilling around our tailings facility and around our pit. We have all the drilling done to raise our resource in the areas that we want to mine to measure plus indicated.
Yeah.
So the resource drilling is done to take it all the way to feasibility, but we have other work to do on the property to bring other aspects of the project up to pre-feasibility and then feasibility standards.
Super. So that sounds like a great work plan for this year, of course,
Oh,
and
yes.
also probably 2021.
Yes.
What is about the financial situation? Because that costs all money.
Yeah, we're sitting at about $1.5 million right now. So sometime in the coming year we will have to raise some more money. We're hoping to do that with strategic investors. We're
That would be my next question.
Yeah, we're looking to sell a piece of the project to somebody that really needs a large long-term supply of nickel.
Course.
And we're hoping to raise enough money to take it all the way to feasibility doing that. We'll probably do a small equity offering as well at some time in the coming year.
Okay, fantastic. Well, Mark, that sounds like a good game plan, and congratulations on the project. That really sounds robust and really compelling, and we really look forward in approximately 2 weeks to the numbers.
Very good, Joachim. Thank you very much.
Thank you very much. Thank you.
Cheers.
Thank you, Mark. Yeah, ladies and gentlemen, it was Mark Jarvis, the CEO of Giga Metals, and you heard it. I would say bombastic project about nickel and cobalt right here in the heart of British Columbia, nearby the Golden Triangle, and I would say, in the foreyard of Vancouver. And that's exactly what you want, because you need to have ESG rulings on the one hand, you need to have real good jurisdictions, and you need to have a big project which is large enough to support the markets at least 20 to 30 years. And that's what we all have here. And so we look forward in 2 weeks. He will have his numbers out, and then let's move it forward. Thanks for watching us. Check out the company. Bye-bye from Vancouver.